Pedro,
Hi, Dale. Good morning.
hey, good morning, Pedro. Great to see you. What a week.
What a week.
So, why don't we start with the narrative that the market's starting to talk about? It seems like the market unraveled a little bit this week because they don't think they have the Fed behind the market in a sustained, obvious path that they're going to take, and that's shaking things up. Do you think where the market is, like say, for example, we're another 5% lower or something like that going into the meeting, would be enough for him to cut in December?
Uh, I don't think the market move has any bearing. I know that you guys
Okay.
think you're the center of the action, but honestly,
Uh,
that's like short-term market action is not a driver of Fed action.
uh,
I mean, what
that's
is
why
the
they didn't
driver of Fed
hire.
action is, I will say if bond markets get repriced in a really, nasty way, like if the actual pricing of Fed funds is way out of line with what the Fed thinks, as it was in October, for instance, then Powell is forced to realign sentiment. But I don't think this market move resets anything. I do think that the divisions were coming to the fore this week in the Fed speak because they're very real and because uh, there's actually very little certainty about what to do in December, and in fact, very little clarity about what's going to go on next year under new leadership. So, one of the reasons for that, I spoke to Rob Kaplan, former Dallas Fed president, just
Yeah.
last night. I interviewed him, and his take was that basically it was easy to get the first one or two insurance cuts out of the way and to get agreement on that around the table. But now that you're getting closer to neutral, and that some people think you're already at neutral, basically,
I got it.
it's harder to get policymakers on board with another rate cut with inflation still about a percentage point above target. And so you do
Okay.
have that kind of complication of, the Fed can't really cut into this inflation without raising inflation expectations in some way. The government shutdown might have strengthened the hands of the hawks in the sense that you failed to get confirmation of any worsening of the condition of the labor market while still getting confirmation that inflation remained high. And so that kind of tilted the balance a little bit in favor of the hawks. If we, for instance, get some very nasty payrolls readings coming out of BLS ahead of the next meeting, it could be that that sways the committee into doing another cut.
When
Uh,
do you expect this data to start flowing again, Pedro, after the
I
shutdown?
think we're going to get some clarity today about that. We're just trying
Okay.
to figure that out ourselves. But we should be getting a calendar from BLS fairly soon. And then we'll have
Okay.
some clarity. But we already know it's going to be so spotty, and there's going to be doubts about, you know, what the effects of the shutdown were and weren't. So, for instance, I think we're going to get payrolls, but we're not going to get the unemployment rate. And so we're just going to go a month without an actual jobless rate. So that's a very, very important piece of the puzzle that's
Yeah.
missing. I think we're going to be
Yeah.
missing 1 month CPI if I'm not mistaken, but don't quote me on that. So yeah, I
You-
think one of the other things that Kaplan said I thought was interesting is that the Fed basically has two options, which is they could either do a hawkish cut in which they lower rates at the December meeting, but then signal that the bar is much higher for further action in the future.
Okay.
But the problem with that is it kind of shuts the door to additional cuts in the near term if the job market does get significantly worse. And the other option would be, which might actually get the Hawks on board more easily, could be a dovish pause in which Powell says, we're watching things. We could do more
We're
if
ready to go if needed.
exactly. And so those are kind of the two options. Still would lean in the direction of them cutting. But honestly, Dale, I think this debate over December or not December that's driving the market is kind of off the mark. And I'll tell you why. We're going to get perhaps before the December meeting, but maybe after it, likely before Christmas, we're going to get an announcement on who the next Fed chair is. And
Okay.
regardless of who that is, they will have a very strong push from the executive to reform the institution in a way that I don't think that we've quite wrapped our heads around. If you think about how aggressively the Trump administration has gone after every other agency, department, cabinet, major institution in the United States, the Fed is no different. Yesterday, there was the news that, or was it yesterday or the day before? The week just gets smashed together, but that President Bostic is going to retire in
Retire.
February when
Oh
his term
boy.
is over.
Yeah.
Could have been renewed. So I don't know if I can't say that there's any politics involved in this, but that's definitely the date that people were on the lookout for potential changes at the regional Fed level. So we'll see what happens there. So it
Okay.
really depends, and that could be one of the reasons why markets have been expecting a more dovish Fed into the future. There's this big disconnect between like market expectations into next year and
Yeah.
how the Fed sees things. And I think that's in part because the market is looking past Powell and looking toward a Fed chair who's going to be working for the president, more or less.
Right. Actually, so it's going to be kind of like an Erdogan directing central bank policy. We know what happened to the lira.
Well, the thing is, I think the market believes that Scott Bessent is a sort of Trump whisperer who will talk him out of his worst instincts when it comes to central bank independence. But I do think they're going to get very creative and kind of cute in ways that we haven't thought about and probably can't think about. Because I think the way that this administration works is they put a bunch of people in a room and they say, like, come up with, anything you can and let's figure it out. And so they're very creative in pushing the limits of institutional boundaries. And so I don't think we kind of can wrap our heads around what they might try to do in terms of Treasury Fed coordination, in terms of trying to hold long-term yields down, in terms of playing with the yield curve as a policy tool. I'm just in terms of potentially trying to funnel funds into housing in some major way. I've seen a
Hmm.
lot of ideas thrown around, and I'm not sure what they have in mind, but I'm sure that it's going to surprise us in some way.
Okay. Yeah. There's a lot of talk about restructuring debt, and one of the tools might be the revaluation of gold. Some people are saying that crypto is going to be part of it. Uh, do you know what the grand plan is from Besant here? He's kind of like in the administration, like General Milley was in his first administration, like you're saying, to, appeal to his better angels, right? So, do you have any idea, or I know you're at a conference a couple weeks ago where they were talking about Fed independence. Do you think there's a plan?
So first off, that conference was excellent. I urge everybody to check it out. It was at the Peterson Institute, and it's available online at their
Yeah, I put the link out here that day when you
yeah,
gave it to me.
it's really
So,
it's really
yeah. Did
fantastic.
you speak or you were just you
No,
were a
no, I was just
listener?
watching. I
Yeah.
was watching.
Okay.
Um, but I'm sorry, what was your question again, Dale?
Well, I think the theme was
About restructuring debt
but
and what the main
yeah,
mission is, right?
yeah. What's the game plan?
Honestly, I don't I think that Scott Besson sees himself as a kind of Hamiltonian figure, and I think he's spoken about it in the past. He
Okay.
wants to oversee a giant leap forward in American economic growth. So I think he's going to do everything he can to put the economic machine of the, American economy into overdrive through manufacturing investment, AI investment. They feel that the tax bill is going to kick in at the beginning of the year and really start to have stimulatory effects in addition to the deregulation that they're doing, opening up room for kind of M&A and more competition, even in kind of asset markets. And so I think that's how he envisions it. He thinks that deregulation is going to bring about great prosperity that takes us beyond what we see as potential, what economists see as potential growth of around 2% and aim for the threes or fours. I think that's the grand aim.
Okay.
And how he gets there, I think they're piecing, I think they're kind of building the plane, as they go. I think the they're not quite sure how they're going to get there. And in
Okay.
terms of restructuring debt and revaluing gold, you've seen that Fed paper about that, right? Have you seen that?
No, I haven't.
There's actually a Fed board paper about uh, gold revaluation that I'll pass your way. And it just discusses, the possibility. It's well outside of my, realm of expertise,
Yeah.
the metals are, but it's something the Fed has at least considered or discussed. That's about its own holdings, of course. Um,
Yes.
and so, but I'm not sure what the grand plan is. I know that the big idea, let's put it this way, very unusually, Scott Bessent, the Treasury Secretary, actually spoke this week at the New York Fed's Treasury Markets Conference. As you know, the Treasury and the Fed keep their business quite separate. So it's unusual
Yeah.
to have a sitting Treasury Secretary at a Treasury Markets Conference in New York. And the title of his speech had something about the golden age of the American economy in it. It was a very kind of political, it had a lot of political overtones for a Fed a speech
Yeah.
delivered at the New York Fed. And so I think that's a hint of how he sees things. And I think maybe one way to think about it is whomever the next Fed chair is, Scott Bessent is really the next Fed chair, and he's going to be having a great role in directing and coaching that person in what to do. And
Kind
so
of
I would
like
direct everybody to the piece.
James Baker was with Bush. He
Indeed.
was,
And so I would
you know,
direct everybody to a piece that he published in International Economy a few months back. It's a 10-page, very extended essay. It's almost like the foreign affairs for the international economy, to your point about James Baker. Um, and it really lays out his vision for why the Fed has failed as an institution, has failed the country, and what he thinks needs to be done. And the reforms are fairly radical.
yeah. All right. So, a brave new world we're headed into.
Yeah.
Should be some great stories and topics to cover.
I think it's gonna be really fascinating.
Yeah.
Absolutely.
So,
This conference, honestly, this conference about central bank independence, what was so fascinating about it, Dale, is that for better or worse, Donald Trump forces us to kind of I think I heard Steve Leisman say this once. He stress tests every institution that he comes into contact with. He
yeah,
pushes them to the limit. So here we were at the Peterson Institute having this really incredible debate about like the nature of central bank independence, how far it should go, what kind of accountability and transparency is required for a central bank to maintain that independence, what parts of the central bank's mandate should be more accountable to Congress and what parts should be actually independent, like the actual monetary function versus regulatory stuff. Really foundational stuff that we might not be thinking about if it weren't for Donald Trump. And one of the things that really struck me, there was a panel with a bunch of lawyers that was like the legal panel as opposed to the economics panels. And it really struck me how much all the stuff that we follow in markets and as a Fed watcher,
doesn't matter anymore.
no, not that it doesn't matter, but how much it's subservient to the law, how
Oh,
much the rule
interesting.
of law is actually the umbrella under which we all fall. In other words, because ultimately they were discussing how the core of Fed independence now hangs on a awkwardly phrased sentence by the Supreme Court, that carve out that says the Fed is a uniquely structured institution, the carve out in the Slaughter case, which overturned the Humphreys executor decision. And basically, that sentence, which one of the lawyers or the author of the, I think is Steve Vladeck, the author of the Shadow Docket book, he said it was a stupid sentence because basically there's no legal reason why the Fed should be special versus other institutions. And by trying to create this carve out simply uh, to placate markets, the Supreme Court had left itself on very shaky ground, essentially. And that decision is still, hanging out there. And so the Lisa Cook case is very, very important for the future of Fed independence.
Interesting. And I do want people to know that, want to follow you. And I think it's, to your detriment if you don't follow this particular Fed watcher. You go to MNI and then yeah, you're under what? Under policy or
Policy and then developed markets.
okay.
But a lot
Okay,
of that stuff
so
is hidden
all
behind the
right.
curtain.
All
So
right. Yeah, so here you go and he also conducts, you're one of the few people that really gets to talk to a lot of ex-Fed
keep scrolling,
officials.
Dale. Keep
Okay.
going down a little further. It's the exclusives. Those are the ones that matter. It's all the exclusive stuff. And you click on
Okay.
it. So
What do you get out of this systemic risks?
oh,
What are the main ones?
that was a really fun interview. That was actually a podcast that I did this week with a
Yeah.
former SEC economist who also worked at the Fed, and he's studying private credit. He's looking at business
Uh,
development companies. Have you heard of these BDCs?
no.
Oh man, you got to check these out. I hadn't heard of BDCs either, so I'm glad that we're on the same boat because you're a smart guy and you're a man about town. So business development companies, it turns out, represent about 10 to 15% of the private credit universe, which totals $2 trillion, which is not nothing. And
No.
and they lend to small and medium-sized businesses. There's I don't know how many there are in the country, but there's well over like 200 or something. And so Samim, this economist, did some research on the interconnectedness of banks, insurance companies, and other financial type firms in times of crisis. And he compared the financial crisis episode in '08 with the COVID crisis. And it turns out that what private credit is doing is it's ratcheting up the interconnectedness of the linkages between these assets, so which of course raises the chance of synchronized, asset price declines in times of stress. And
Right.
and he
You
can
know,
find
I
direct
was
linkages to private credit for the creation of this interconnectedness because of the opacity of the lending that's taking place.
yeah,
So, and
we could have it would have been enough to have just problems with the shadow banking system with credit issues and bankruptcies, but the commercial banks funded this. So they're what you're talking about and what the interview is addressing is that now it's really too big to fail
yeah,
because you can't just have problems with private credit without it affecting the commercial banking system anymore.
correct. And the fear is, Adam Posen gave a very good speech about this at the Central Banking Conference. The fear is that the administration's kind of uh, warm embrace of the crypto industry, including its direct ties to the industry in terms of business interests, potentially will use stable coins to create like a window from crypto into the regulated financial market and create some kind of too big to fail, function, some kind of money market stable coins that becomes too big to fail and thus it forces the Fed in some way to, become a backstop for the crypto market.
Wow. Okay. So there's got to be a cost. So maybe even though we're on stable coins, what it represents isn't so stable and is accelerating the depreciation of the dollar.
I mean, when you just look at
What do you think?
the issuers of stable coins, they're like the main crypto firms, including Binance, right? Which
Yeah,
had a lot of accusations of fraud
problems.
and so on. So
Well, he's out there partying again.
he, yeah, he's been pardoned, right? So
Yeah, yeah. I think was it a Chinese curse? May you live in interesting times.
here we are.
Yeah. So uh, let me ask you this, Pedro. We're wrapping up the year here. We're only about 6 weeks away. Um, the biggest development that you think could impact financial markets and the economy, is it going to be what the Fed does or doesn't do in December? Or is there anything else that you're paying attention to? Maybe something out of Europe or something out of Asia. We have new political leadership in Japan, and people are thinking the yen is going to go to US dollar yen to 200. because of her stimulative policies that she's been talking about. Um, can that happen in Japan, or should we be looking to be contrarian? Because I don't think the Trump administration would like continued and further depreciation of U.S. dollar yen or depreciation of dollar yen.
Yeah, I think so. I have no particular, there's nothing particular in Japan that makes me think that they can't engineer stronger growth at this point. It does seem like they're on the cusp of a turnaround. So, but that's
Okay.
something that I say as someone who's watching it from very far away. And I would honestly, Dale, we have been kind of detached from the world in a weird way. And what happens in the US kind of stays in the US. And I do think that the main driver of markets will be the Fed, not the Fed decision in December, but I think
Going forward.
the
The new
appointment,
Fed.
really, the appointment
Yeah.
of the next chair. And I think what kind of changes happen around that. I think that's the main thing that I'm watching, but that's my own insular granular view as a Fed watcher.
Who's your best guess for landing the job?
So it's definitely one of the two Kevins. And my guess is actually Kevin Warsh because I think that having spoken to people in the markets, I think that Hassett has gone a step too far in the direction of like working for Trump, and therefore there's like an actual risk that his appointment would lead to some kind of bond vigilante concern or rebellion in terms
Mhm.
of loss of Fed independence, whereas Warsh, I think, can claim a greater level of distance from the president and therefore might have a stronger chance. Also, uh, just in terms of his placement in history and where the way he speaks, his general demeanor, I think he just
He fits
strikes me
in.
as more of a Fed chair type than Hassett, but I might be
Okay.
proven wrong. But I think it'll be one of
We're
the
all,
two.
yeah, we're,
Chris Waller would make a fantastic Fed chair, and it's it's great to see him in the mix for finalists because he is super experienced. He knows every facet of Fed policy, but he's, I think, too much of an insider to reform the institution as much as the administration would like it to be reformed. It's hard to say like, oh yeah, we've been doing everything wrong, guys, so we need to start fresh when you've been working there for 35 years.
is it true that Paul's going to come work at MNI?
We're definitely going to have him on our advisory board. We have two former Fed of FOMC members in our advisory board, actually. So
Cool. Yeah. I wonder what he's got to write a book, but I wonder what's next for him. Um,
I think he wants I think he's tired, man. I think he wants to relax. Powell is like a pretty happy-go-lucky guy. Like he
yeah.
plays the guitar. He like,
Oh, okay.
he's a
So,
deadhead. He likes enjoying life. I think this job was like more than
yeah,
not
bargained for.
he no yeah it was he knew it was going to be a big job, right? But I don't know if he knew how long he was going to serve and the intensity of his second term. I don't think he could have predicted. So
Yeah. Anyway, uh, got to admire the guy, how he stood up to the pressure all this time. And whether, he made mistakes or not, to err is human, even if you're at the Fed.
it's true.
So,
He's definitely come out looking strong and as a defender of the institution.
all right. And you're a defender of all of us people out here being in tune with what retail people that mainly would be only available to the institutional crowd. And I think that's a great benefit of you coming here and sharing what you're thinking about every quarter. I really appreciate it, Pedro, because most of the other guys are doing it from secondhand. You're out there digging. You go to these meetings. You're like a gumshoe detective that you're there on the ground checking things out, and not just from the comfort of your office. So
That's for sure.
yeah, I really thank you for being part of Face for the last, I don't know how many years. What's your best guess? How many years have we
I
been?
think it's been 5 or 6, maybe since
That's
around
great.
COVID. Yeah.
Okay. Well, I'm glad our paths crossed, and
It's my pleasure, Dale.
looking forward to talking to you again next year, Pedro. And it's always I always learn something every time we talk to each other. So everyone, go to MNI to check this out. A lot of this stuff only institutional guys would get their hands on it to hear it, and this can keep an open mind. Plenty of excellent content on MNI, especially Pedro. And that's a wrap. So don't just count your Fed cuts, your money supply, your gold bullion that you should have hedged. Count your blessings, and we'll see everyone again Monday. Thank you once again, Pedro. Follow Pedro on X at P. Da Costa, and everyone have a great weekend. Thank you, buddy.
Thank you so much, Dale. It's always a pleasure.
All right. See you next year, bro.
Absolutely. Happy New Year. Happy holidays.
Same to you,
We'll be in
Pedro.
touch.
All right, buddy. So,
Take care.
everyone, have a nice weekend. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.